This is the weekly economic and market update, and I want to start this whole thing with a rebound, and we'll take a look at the SPY, which is the S&P 500 daily uh, chart. And what you're going to see here is kind of, things were left in a lurch last week because we had broken back down, so close to this downtrend line. You really didn't want to go under this downtrend line that began back in January. Whoops. If I can know how to move this thing. Um, so this began back, you know, in January, at the beginning of January of last year. And, it's been in this downtrend, finally broke, and then we started to break back under. Now, you know, some people are saying, well, we could get a head and shoulders, maybe. I just don't think so at this point. And we started this uptrend also that helped break this longer term downtrend from January that started. Oh, it started back in November, and moved its way up. Or I guess that's October, isn't it? That's October, and this kind of looks messy and everything, but this is the magic of charts. Is when you look at the weekly, it doesn't look so bad. It just shows this one little tail, underneath all of this, and then last week, of course, ended right in the crotch of the thing, and then this week it made its way back up, and it was really an incredible week from a standpoint that there was a lot of panic going on, in this general area here. So this one, we broke below this downtrend again. Oh no, we're going into a bull or a bear market, and then it popped up, and then obviously today popped up again. So, it's on the rebound. Where does it go from here? I don't know. I do know if we clear 416, we're probably going to 429, which is the next level of resistance. There's a whole slew of gaps here. I think this one filled, but there's one here at about 407. So that's the good news. And we look at what kind of drove it. It was an interesting week because remember everything. Good news was bad news, and bad news was bad news last week, and I think that kind of carried over into Monday. Durable goods came in worse than expected, and the market went down on Monday, and then pending home sales, you know, was down 24.1%, but not as bad as the forecast. And then Tuesday we had the PMI, the Chicago PMI, and it was down under what the consensus was. You had the consumer confidence. They're expecting 108.5, went down to 102.9. And then Wednesday we had the manufacturing PMI. Came under the 48 consensus number just by a little bit. And take a look at that. We kind of see, it seems to have leveled off a little bit here, but still 47.7 is contraction in manufacturing. And then the employment also now is contracting in manufacturing employment. So that was not necessarily good news, for the economy. But then it seemed to play out. I mean, from the non-manufacturing PMI, they thought it was going to be 54.5, and was 55.1. So, but down from the previous report in January. And then we had a whole series of speeches that were kind of a mixed bag, actually. And that was the week. And a lot of these Fed folks, hawkish as usual to a certain extent, but you also got the sense that that there wasn't going to be anything more than a quarter of a point raise in the Fed funds rate over the next 3 meetings. And one of them basically said, we will probably be ready for a pause by midsummer or late summer. Um, and so that kind of put actually the possibility of maybe another one in September, quarter point or so. They're and it'll change. These things are dynamic, but I just have a feeling that they need to slow their roll and take a look at what they've done to this point. The other thing that happened this week, and it was kind of bad, which is the mortgage rate continues to go up, and we made our way down to 6.18%, and 639, 662, 671, and we'll take a look here in just a minute. We'll go through the market data here next, but that was kind of the week as far as economic data, and the earnings were kind of a mixed bag, but there was also a lot of good news associated with it. Things weren't quite as bad as what people expected yet, but this past week, economic data, we went from bad news is bad news and good news is bad news to kind of maybe a little bit more rational, I guess I would say, and the markets then recovered. So let's just go back and take a look at some of these things. So here's the Dow, bottomed out here on Wednesday, and then Thursday, big run up. Today was a surprise to me. Yesterday wasn't such a surprise, but today it really surprised me that we got such a run right the day after. Thursday was such a run, and we ran it back to 33,385. Now we'll be looking for 34.3 or so next, where we get some resistance around that particular area. We talked about the SPY, that when we look at the weekly, it doesn't look so bad. It looks like we got a higher high, a higher low, a higher high, a higher low, and now we're working our way back up to put in a new higher high, but before the next pullback, the expectation would be somewhere in this 429, 430 area. And then the 10-year, which went up the entire week, which obviously this is what's affecting the mortgage rates, and popped up over 4% today. And it's starting to get a little concerned, but the market was going up while this was going on, which, again, why I was a little surprised, because I saw this thing up over, what was it, 4.09% or 4.08%. But then it ended lower, and that looks like a shooting star, which hopefully will mean that we start to get a downtrend in the 10-year, especially if you're a bull. And the dollar kind of went through the same thing. It hit up in this no man's land area, but never, went across it, closed in it, and then went down today. Closed in it yesterday and down in it. I'm sorry, that's the weekly. There's the daily. But you can see we're up there. Now we're kind of just consolidating right around that 105-ish area. And, if that thing goes down and the rates start to go down here, if this is the beginning of something beautiful, then we'll start to see mortgage rates, head back down, and maybe some of the inflation some inflation relief, at least in the short term. Crude oil was, it's been in this kind of downtrend. It kind of broke up today, through this cone. Now that's only one day, so this thing could go back down and then slaughter down. And that's actually my expectation, is that this thing will go back into the cone next week and then go lower. And then the VIX finally broke its cone, and it's doing kind of what I expected, which is it broke down to 1848, some of the volatility index. And typically that means that, it's going to give a chance for the bulls to run. And so that's good news. breaking this upward trend that it had, and this kind of cone-looking thing. And then the put-call ratios, still a little elevated, but people were talking, what was the fuel for this week? Well, it was probably the fact that we had a lot of puts in the market, and people had to start closing them as the market went up yesterday, and that's one of the added fuel to the fire today. So let's take a look at next week's calendar. And there are a few things on here. We have factory orders that were reported. This used to be such a significant figure back in the day. In the 80s, I used to track this number. It was almost a life or death number because we manufacture so much stuff outside the U.S. now. It's not quite as dramatic as it was, so I keep an eye on it. But to me, it's important, but it's not as important as it was when we used to manufacture a lot more stuff. Fed Chairman Powell's testimony at 10 a.m. sure to be a market mover. We've got again 30-year on Wednesday, the 8th, and then we have the JOLTS job openings, which they're expecting to be 10.6, so down from the 11 million that we had last month. And then Powell speaking again. I'm not sure I tried to figure out what the difference was between the two, but okay. So he's speaking twice, or is this an error? And then Thursday we get our jobless claims again. They've been coming in lower than forecast. And then Friday is the non-farm payroll, which really screwed up the markets last time. Because remember, it was, I can't remember what the forecast was or the consensus was, but it came in 517 and blew everybody's minds because we had kind of been running this downtrend. All of a sudden, boom, 517. So I'm curious to see if that gets revised next week. And then what else? We have the unemployment rate that comes out of that. And for investor sentiment, now this was, this again comes out on Wednesday night. We see it typically Thursday morning. And, we've gone from kind of getting, bullish, at least historically, an average expectation of what bullish is, 37.5% at the beginning of February. And, February just destroyed all that and went down to 44.8%. And I think it's made people a little gun shy. And that's one of the reasons why all those puts wound up getting sold out. They had to cover those today, especially, but probably yesterday also is when it started. And then the fear and greed index, we have paint that. There you go. Is made its way back down. It was running somewhere pretty much in the neutral territory at 55 at the previous close, and a year ago we were 21. So there's still a lot of fear out there, but there's a lot of greed too. So we got a kind of a mixed bag there between the investor sentiment and the fear and greed index. And this is probably at least a little bit more. I'd certainly like to see that over here, but I don't think it will be after the last 2 days. It's going to start making its way back up and then get smacked down again at some point. So that is a look at next week and the sentiment surveys and the fear and greed index. And my final comment really is, I started investing in AI, and I'll probably put out a video on some of the research that I did on AI companies. Now, I got to tell you, I've used AI. If you haven't, I think it's chat.openai.com. And you go in there and you ask a bunch of questions, and you start asking questions that are political. You are going to get left answers. You know, definitely people who are coding this are young and left, if you will. So you're not going to get a balance of what you would hope AI would be, from that. But the tool itself, when you're doing other things, is very useful. I mean, everything from, I've started to run Pine scripts for some of the indicators and putting together my formulas out on TradingView, and you know, it's a very useful tool for that type of stuff. Just expect BS on the other things, but but you know AI is the ticker symbol that I invested in this week, and it's something I'm dipping my toe in. Let me just pull this back up here for a second. I put it up here, but you can see, you know, you look at this and then you say, "Gosh, look how much it's gone up." But the funny thing is, when they first started this fund, back in or this company went public back last November, it was trading at upwards of, whoa, I didn't even know it was that high. Well, let's put it in perspective at $180, and you can get it today for $28 after it being down to 12. So my expectation is this thing will probably work its way back up. There'll be competition there. It's something I think people ought to keep track of. Like I said, I'm invested in this particular stock this past week, and my expectation is that this thing will start to. It's just talked about a lot, and it's going to be one of those game-changing things that will help people and companies and things of that sort. Won't help us politically. Never mind. You look for yourself. Maybe it's what you like. But anyway, that was kind of the week that we had out there. I would suggest you start looking into AI. Like I said, I'll put out a video next week. I'm in the middle of some research on some of these AI companies, that are involved in this, and I really don't have it separated out much in my head. I just knew this company was very popular, and felt I ought to at least get in on one of the originals. So that was that's really it for this week. It was an interesting week compared to last week, when good news was bad news and bad news was bad news, and this week it was more things. Like I said, got a little bit more rational out there, and now they'll start probably getting irrational as we start our way back up. But that's what I wanted to cover this week, and remember, there is certainly always a better way.